Welcome, dear traders. Today, inflation and deflation have been shaping market sentiment in the Asia-Pacific region. Yesterday, data from the United States showed a stable rise in the consumer prices. That's why, before that, Wall Street indicators dropped. And after the publication of reports in China, the stock indexes of Japan and other antipodian countries entered the bearish zone. Let us figure out what dynamic manifested the main currencies of the region at the beginning of the day. As you remember, the recent comments by several Fed officials were dovish. The politicians have also emphasized that a rise in treasuries yields is one of the restrictive factors. Such words gave investors hope that the regulator would not raise the benchmark rate anymore. Curiously, the US bond yield started falling in response to the comments, and the US dollar also lost value. However, the situation changed dramatically after the issue of US consumer price figures. Although the data exceeded the forecast, the indicator remained at 3.7% on a yearly basis. Meanwhile, the US unemployment claims figures turned out to be below the forecast. In other words, US inflation stays above the 2% target, while the labor market situation remains tense. Under these conditions, the Federal Reserve may take one more hawkish decision this year. A hawkish tone was also noticed in the speech provided by Federal Reserve Bank of Boston President Susan Collins. And she said that the recent inflation figures reflected uneven progress in reaching price stability. She confirmed that the US Central Bank might have to raise the key rate again. Judging by the FEDWATCH tool, today markets estimate that the likelihood of a key rate hike in December at 33% compared to 28% before the report's publication. Forecasts were also considerably changed for the meeting scheduled for November 1. Earlier, the possibility that the regulator would keep the benchmark rate at the current level totaled 99%, and now it's just 90%. The US dollar reacted to the inflation data with a rally. As a result, it reached its weekly high of 106.60 points, showing the most significant daily jump since March. At the same time, the greenback faced pressure from the uncertainty about the future Fed's plans. This is the key factor in the currency market today. This also explains the limited increase in the US dollar against a basket of 6 major currencies. During the Asian trade, the USDX entered a bearish zone over 106.30 and 106.50 points. In addition, lower bond yields also undermined the greenback. Nevertheless, the fundamental data points to bullish sentiment. That's why the decline could be used to open buy orders. Despite a moderate decrease, the US dollar managed to keep its yesterday's gains against the Japanese yen. In this light, the yen fell once again, thus approaching the critical level of 150. According to the chart, it was trading above the levels seen last week. Then the yen managed to climb by 1.7%, causing a drop in the dollar-yen pair to 147.30. Notably, the Bank of Japan did not confirm its intervention in the currency market. Will we see in this time? It's very unlikely. Politicians suppose that the yen's movement reflects fundamental economic indicators. Although some technical indicators are pointing to shift toward a bearish trend, and the US dollar is held in the pair in the bullish zone thanks to its constant strength. That's why early today the yen consolidated near 149.80. and was about to rise higher. The situation in China continues to exert pressure on the markets and currencies of the region, and today's reports unveiled that the world's second-largest economy goes on combating deflation. This means that in China, a drop is recorded not only in prices but also in production and demand. Imports have been contracting for 8 months already. Notably, in September, the indicator showed the smallest drop since May, and the stimulus to domestic demand before the Golden Week holidays is the key reason for that. In addition, the Chinese currency is losing value because of low interest rates not so long ago. And the People's Bank of China stated that it would resolutely prevent currency overshooting risks and keep the yuan basically stable at reasonable and balanced levels. The data and moderate inflation figures in China may affect the Australian dollar. Since Australia is China's main exporter, the economic situation in both countries has a considerable influence on the Aussie. However, today, the better part of the pressure comes from the US key rate and uncertainty. It's a cap in the global risk sentiment and causing the devaluation of antipoding currencies, along with the greenback's overall appreciation. As a result, the Australian dollar fell to its yellow low yesterday. Early on Friday, it was trading almost at the same levels, hovering within the narrow daily range of 0.6310 and 0.6334. The New Zealand dollar also dropped to its weekly low. It has been trading with a decline against the greenback for 3 days in a row. Thus, the New Zealand dollar tested a new weekly low near 0.5911. According to the fundamental data, the pair will slide even deeper. The currency closed Friday's session within a narrow range of 0.5911 and 0.5938. And this is all for now. Share your opinion or ask a question. We wish you a good Friday and see you next time.